Hey, what is going on, guys? Evanaldo here. Given that the crypto markets are a little bit boring right now, that weekend kind of sideways flat action, I figured I wanted to talk about something a little bit different. And obviously, we got the election coming up. We're in an election year. A lot of people would probably be curious to see, what's going to happen with the S&P 500, what's going to happen with the Nasdaq. Wanted to look at a few of the charts, looking at like S&P 500, looking at Nasdaq kind of compared to the money supply, the M2 money supply, which obviously if you're just printing a bunch of money, which we saw here obviously with the pandemic, we crashed down, a lot of money was printed, then you came up to essentially that high that you saw before the pandemic, March of 2020, then you came back down. But now we're looking bullish. We're making the highest high on the S&P 500 versus the actual money supply in since 1997. So about 27 years ago, 26, 27 years ago, essentially. I'm going to be 27 pretty soon. That's how I know. But yeah, I mean, it's kind of crazy. And you're looking at that. And then if we look at kind of the technicals here, money flow still looks not bad. I mean, on the monthly, if you were to do this again, that would be, I mean, this would be a high. This is probably years away that this would kind of take, I guess. But, in the next year or so, getting back up here, and then maybe by the end of the decade, next couple of years, in the 4-year cycle of crypto, which we would essentially top out, in 2025 and then 2029 in the 4-year cycle of crypto. If the S&P 500 does top out in 2029 or something like that, I would guess it would be maybe somewhere up here, following, kind of this trajectory upward, maybe somewhere at kind of this high. This is the highest it's ever been as far as, I guess, the money supply, as far as I know. I mean, this data started in 1980. And the other thing too here that I want to talk about is essentially, I call it 20-year theory. I'm sure I'm not the only person who's kind of discovered this, saw this on the charts. If you start with 1980 and you get to 2000, essentially 1980 or 1982, 20-year period of just pretty good prosperity. Then what happened? Essentially, this was from 2000 to 2009, essentially a 9-10 year period, essentially a terrible decade for the S&P 500. That was that pattern. And then if we do follow essentially that, you're looking at the bottom was the bottom was right here in 2009. So 1929 would be 20 years later. Right here, it was 82 was that kind of bottom when this started. I think the real bottom was, probably it was much lower, kind of in the late 70s or something, I would think. We'll look at another chart in a second to kind of confirm that. But obviously, when you're versing it against the money supply, it's different than just looking at it, against the dollar supply, especially. And that's more important, since the pandemic, since all this crazy money printing, really since '09 as well. But even with that money printing in '09, '08, '09, you still did come up a good amount. So that's that period essentially forward. And if I had to guess here, I mean, obviously people talk about, recessionary fears. People talk about that type of stuff. We'll talk about more about that in a second. But I mean, I would assume, you could argue, I mean, that obviously this is a recession. Obviously this is pretty clear cut. This is a recession and this is a recession. These were both pretty bad recessions, I would argue, especially '08 for obvious reasons. Here, by most metrics, this would be a recession. And 2022 would probably be a mild recession, I would argue. I would argue 2022 would be a mild recession because by a lot of metrics we were in a recession. Nobody wanted to really admit it, and then we luckily kind of came out. So if you kind of follow that area, you may not see another recession for another 5 years or so. It could be the late 2020s, theoretically. I'm not saying you can't, come down farther. And, when you look at unemployment right here, I mean, trigger wave to the downside in the monthly. I mean, it's a monthly chart. Unemployment, I mean, that's okay. Doing technical analysis in this, I don't know. But, you get what I'm saying. I mean, monthly, coming down trigger wave. You're at very low areas, but you were at a very low area here, shot up for the pandemic, and now you're back at kind of that area. Historically, unemployment doesn't like to stay that low for that long, but if it does, theoretically you could keep, being stagnant here. Maybe we just go up slowly. You know what I mean? Maybe we just go up slowly. Maybe it kind of stays low, and then you have the gig economy. You have things that prevent unemployment from kind of going up real high, such as people doing Uber. There's TaskRabbit now. There's a lot of gig economy jobs that those do keep a lot of people out of poverty, and ultimately, those are things people go to when they get unemployed. That's what's probably kept it down, since that all started, since Uber, got big around, 2015, right around, so unemployment just keeps going down there. Also, there's a lot of people, it's probably more socially acceptable now, live at home with your parents. More and more people live at home. There's a lot of people that aren't actively like looking for work like there used to be. At least I think so. And that also kind of keeps this down, which could keep it down for longer. Now, if we look at the Nasdaq, because obviously when you look at, I just wanted to show you, if we look at, let's just look at SPX let's look at Nasdaq versus SPX. It generally just keeps outperforming. It just keeps outperforming the S&P 500 all the way since 2020, 2002. Not by a crazy amount, 250%, but still, it generally outperforms it. And it looks like it probably will continue if you do, break upward from this kind of reverse head and shoulder formation forming here. If you do break upward, that's what we would potentially kind of be looking at. That next kind of those bigger areas there. And I think it will be, because it was originally the Dow was known like how the S&P 500 was known, and then the S&P 500 was the main one. I think next, within the next 10, 20 years, maybe a little bit farther away, the Nasdaq will be viewed as that. And I think it probably can continue to outperform the S&P 500, assuming we don't go into a recession. That's the thing that would kind of throw the wrench in there. Now, if you look at Nasdaq versus M2 money supply, we're already almost at the all-time high for that. And if we break upward from here, you get a technical target up to this point. If we follow this general pattern end of decade, you'd be coming up a good amount farther, generally on the Nasdaq. So you generally keep coming up for kind of years ahead and following that kind of 20-year pattern area. Now, data started here, 1985. Okay, I think that's when the inception of the Nasdaq was, around there. All came all the way up, 15 years, and then essentially, 10 years of pretty much just straight down. You had that little blip there, right there. I guess, it was a bubble popped and then started to come back, but right there. And then obviously, if you were to do that same pattern, even if you just did 15 years, let's say, 15 years, we got like another, we're getting close to it based on that. But really the thing obviously would be the 20-year kind of theory thing, bringing us up to, 2029. And the other thing I wanted to show you guys, was, this is where I kind of put out 20-year theory with a lot more data here. And ultimately, I've showed it on some of the live streams, but look, right, this isn't really, this was not a 20 years, it was 1908 to, so I believe it was a 20-year period, and then you crashed down, but you were down for farther than essentially 10 years there. I think that was 1929 to 39. You were getting to that bottom. So even there it kind of was. It was a different kind of double bottom type thing. It was almost kind of like the Nasdaq after the dot-com bubble over there, a little bit, and then it kind of coming back, and then here was that, this was really a 30-year. This was a little bit different. This was really a 30-year, kind of period of prosperity, I guess. If you don't count the war, it was only that 20-year period. And then the 1970s, very sideways, bear markets, recessions, all that. Coming up 20-year period, peak of the American Empire, 13x. And then, these two kind of bottoms there. And then, coming up some more. And now, based on that, you still have until, 2030, 2029. Essentially, if you follow this pattern coming up to here, and then one low, and the second low there. I don't know where the general kind of scene of the crime would be. If you get up to 8K, 9K, and then, let's say you get up to here, 8K, and then when all's said and done, 50% correction. Maybe you'd end up back, 8, 9K, end up back where we are right now, 5,000, 4,500. in those periods, assuming you don't go into a Great Depression, assuming things don't, completely fall apart. But yeah, that's ultimately that kind of view based on this. And what could we, obviously if unemployment rate skyrockets, all that, I think that the thing too, like I mentioned with the gig economy, is that, you're still going to have that preventing the unemployment rate from going sky high until automated cars come out, until all that stuff comes out. When's the earliest that's going to really take away all those gig economy jobs? I mean, probably another 4 years, 5 years at least, I would think. You know what I mean? Late 2020s, early 2030s, I would assume. It's probably going to be a few years before, that's really at our fingertips, where the average person's able to afford, a self-driving car, where companies are able to really automate all these things away, where Uber's fully automated. I mean, you got, what's that thing called? Is it Waymo? The self-driving one? That's at least, I'd say, 4 or 5 years away before that's like trusted and tons of people are using it. You know what I mean? So that's kind of my main viewpoint for there. And that's probably when end of this decade or the next decade is when you see, you really see that recession. You really see those kind of displacement of jobs. I mean, obviously a lot of people are pretty negative on the U.S. economy, thinking we're going into a recession, thinking housing is going to crash, thinking all of these things are going to happen, because it hasn't happened in a while. That's the main view, because the view is it's going to happen because it hasn't happened in a while. But a while could last a while longer. You know what I mean? So that's essentially that view. But I think we still got a couple more years essentially. And I think Bitcoin, looking at Bitcoin and all of this, I think will probably follow its 4-year cycle a bit. You come up into 2025 or something. I mean, I don't know exactly where we're going to go. My guess would be, probably you're going to get above 100, I think. Given the apathy right now at 43K, I think you could probably double, 90 to 120, 90 to 150 or something potentially. I mean, I think 150 or anything above, 140 is kind of a bit of a stretch, but yeah. And then, so you're getting up to this area essentially sometime in 25. Then obviously your bear market 26. I mean, you're probably still going to get your 60 to 70% correction, for there. Let's say it's 65 or 70% instead of, whatever it was last time. I mean, factoring in inflation, this 75 or 70, was it 78 this time? I believe it was. Wanted to get it kind of, from 66, yeah, about 75. Factoring in inflation and all that, it was really probably over an 80% correction. So you're still going to get probably that drop down. You get that kind of correction. Let's say it's 60 something, 70%. You come back down to, I don't know, 40K, 30 something K. Consolidate or whatever in 2027. Then you're kind of coming back 28, 29. That's your case for 200 or 300K or something. That's your case for kind of 200 or 300K. So essentially, if you could get another 200%, 1 to 200% Bitcoin in the next year to 18 months, and then you get your correction, and then from, I'm just thinking from now to end of decade, if we go up to 200, 4x, I could see that. I could easily see that, 400%. And then from this so from that bottom to, let's say 120K high, that's a 7x from the bottom, essentially. Yeah, that would be around a 7x. What would the diminished returns on that be? If you're getting in at 40K and you get up to 2, yeah, so it'd be like a 3x, maybe on the high side. I mean, 300K would probably be a bit of a stretch, but another 6x. That's less of diminished returns. I would assume you would have more diminished returns, but that's kind of that viewpoint in all of this. Bitcoin still being able to really, kind of outperform the S&P 500 and just fill this rally upward until, late 2029, early 2030s. And obviously 2029 is the 100-year anniversary of the Great Depression. My guess is that in 2029, a lot of people will sell out of fear, but it won't be like enough to really bring things down. Like nothing will really happen. And then in the early 2030s, it'll finally reality will kind of start to hit, and you'll get that kind of bad decade. What would Bitcoin do in all of this? I have no idea. Part of me says that, it wants to act like gold. It could still outperform the S&P 500 in the next decade when that's more sideways than it's in the bear market. But It's just been up so much and following the S&P 500. I don't know if we're quite there yet. So it's going to be very interesting. It's going to be very interesting. But I think, a lot of money that would go into gold in that situation probably would go into Bitcoin. So I would have a good view of it, but there's just that main thing that we don't know. But as of right now, I think you got, from where we are right now, if you were to wait, that 5-year point, getting up to 150 or 200, 3x, at least maybe more, maybe a little less, who knows? But there's a lot of good potential here, I think. Anyway, guys, that's all I have for this video right now. Hope you enjoyed something a little bit different, this weekend. Just a few things I wanted to show you guys kind of for macro investing and all that. Smash the like button if you enjoyed the channel. If you're new, subscribe to the channel. Always appreciate you guys. Goodbye.